Alrighty, Doc here from North America. Good morning, good afternoon, good evening. Let's see, there's Janos. Hey, Janos. Doc, please take a look at VIX and Nevada. Sure, let's look at them. Sure, let's see what's going on. Let's see now. VIX. Let's see, where do I have VIX parked? Let's go like, oh, you know what? I think I can put it up on J4X too. Let's see, or not J4X, the Chicago Quants. Let's see, chart and VIX right there. Oh, it doesn't upload. I guess I have to upload it. Okay, let's try that. So we will go over to, let's see again, I got to go back to where am I keeping VIX. Let's open it up right here. There we are. It looks weak this morning, I would assume, just because of the action. Let's see. You know, everything jumped up on Friday. Yeah. So it didn't close on the sell on Friday, but it's below it right now. Weekly is on the third week. We'll see how well that works out. Let's see, let's cancel that. And here it is up on the other screen, and then I'll transfer it over. There's the VIX. It's been interesting. The rotation that's going on in the stock market has basically influenced. Let's see, desktop. No, I want to do that. Let's cancel that. Let's do it this way. Cancel and then export it. There we go. We'll be able to export it over. So the rotation, they've been selling out some big stocks. You know, these monster stocks that are up a couple 100% for the year. And then they been buying like Russell 2000 stocks, you know, Dow Jones, you know, all these, you know, older, or let's say simplistic stocks, not related to AI per se. I don't have much of a problem with that. That seems to make a lot of sense to me. Today, all of them are rifting. You got the Dow up, you got the S&P up, you've got the NASDAQ up. You know, there's only going to be so far that the thing is going to fall because, you know, those big, powerful companies who have been, you know, doubling and tripling in 1 year. That's, you know, it's kind of, I guess you could say it's kind of reached its crescendo. They've split, you know, like Nevada. And they split, I guess it was a couple months ago now. And so, you know, by splitting, you know, the numbers are going to be much more calmer. You know, in other words, they looked at, ran up to, Nevada ran up to, but no, see, no, where is that at? Choose that, open, upload. There we go. Maybe that'll do it. There it goes. It's uploading. So, that's pretty much the answer to that one. Now, Nevada, as we said, has hit the roof. Let's see. Let's go over here and look at Nevada. I'm sure it's up today. But let's just take a look at it on the other platform. It's in a minus, and it's in a weekly minus. And let's see. Let's do this. Let me go find it over here, because it'll show us what they're doing this morning to it. Let's see, is it stocks? Oh, it's in there. There it is. There we go. I opened something up wrong. That's not it. All right, let's try that. All right, so there is Nevada from Friday in a sell. It's was it 3 days in a sell after jumping up for 2 days and then being in the sell for 3, 4, 5, 6, 7 days right there. Then 2 days with this bounce, and then it rolled over again into a sell, slid down a little bit. Second week in a sell, and then we can put it over here. Okay, now here is live updating right this moment. You can see it's starting the week off in a sell. It's up a little bit for the day and a plus by about $1. And let's see, now how does that do? That's 3, 4, 5, 6 going on a 7th. Okay, so that didn't get into the plus. Whereas over here, these bounced up days, it did go into a plus. I found that kind of interesting. What else can we say about any of that? See, there's 3. I'm comparing it, making sure. I think this day here on the 22nd, is that right? Let's see what the 22nd is right there. There's the 21st. There's the 24th. 22nd? There's the 19th. That's 21st. There's the 19th. All right, it's the 18th. Then last week. Now, why is that not? What is that showing? That does seem a little odd, doesn't it? It's missing some stuff. There's the 27th. There's the 28th. That's. Let's try this again. Let's reload this. There's the 18th. It should have been the 19th. Instead it says the 21st. This says the 24th. It seems like it's missing days in there. Let's see where I'm drawing it from. It's NASDAQ. Settings. Okay, let's try this. Does that help any? 26th. There's today. Where's the 25th at? How can they miss a day? They missed 2 days. There's the 19th. And there's the 8th. And what is that again? Let me just try reloading that again. Something's wrong with the Novardo on this chart. I'm not sure what their issue is, but we're going to keep on trying to fix it for a few seconds here. The other chart, let's go back 1 month. Still missing some stuff here. Let's see if I can go to just the New York Stock Exchange quote or the NASDAQ quote. Let's move it over to here so we can get it out of the way. ARC? No. BATS? No. NASDAQ? Huh. Smart. Let's kill some of that volume too. I don't need to hear about that. Alright, there's NVDA. So our new beta program is picking up more data on this particular product. I don't know why we're having an issue with it. Let me just go back and check. NVDA. Let's edit that. See if we can figure out what's going on there. Okay. There's 26th, 25th. It's there. The data is there. I don't understand why it's not reflecting it on the chart. All right, let's try to do just the normal hours. I guess that's what it is. But notice that there's some really strange stuff going on there. The weekly seems fine. Close. What are we using on that? In the settings, 5-day. Okay, let's see what the 5-day does. All right, we're going to try this. This is instrument. There we go. That straightened it out. All right, so there it is right there. Goes into the cell. That makes sense now. There's the 12th, the 13th, or no, I guess we go to 15th. Was it? There is the 30th. There's the 26th. That should be 25. It's not. It's 24. I don't understand it. The data is there and it's not reflecting it. Oh, I saw something in the settings that made no sense. Where was that? Cancel. I think this will do it. All right, let's do that like that. There we go. Watch this. I bet this straightens it out. Yeah, that straightened it out. There we are. So there is today. There is Friday. There's Thursday. That's it. And you can see it did that same bump as our beta did. And went into the sell here, rode down, tried to climb into the buy. We had a green and a red. A green, it was a higher the next day. And then we're in a weekly sell, so you don't take the long, and it just rolls over anyway. And then we get this big slide down into that 105 is 106 area, and it turns back up again. There we go. That straightened it out. All right. In addition, would be nice to hear a broader comment on this week's upcoming Fed rate announcement. All right. Now, what I'm hearing is that I think they start their meeting tomorrow. I think it's tomorrow. And it goes on for 2 days, and I guess you could say the futures contract is predicting no change, okay? But the September future contract is trading as if it's going to be changed. So they have these hope and dreams still of a interest rate cut in September, and a lot of good economists say they shouldn't be doing it. And then all these political economists that work for the Democrats are saying they have to do it. I don't know why they have to do it, but anyway, they act like 5% or 4% interest is abnormal, when in fact it is normal. And so what we've done is they won't talk about QE. They won't tell you how QE has distorted the market, the financial markets, and the interest rates. And so to them, it's like Mr. Obama's new norm. And you never hear the media talk about quantitative easing as a literally a major event on the markets. They act like it's just normal. Now, I hope that gives you a little bit flavor more of how much of a facade the media is doing to the financial market. In other words, they don't tell you the real reasons why markets are moving. They tell you instead what they want. In other words, they want lower interest rates, and they want to act like lower interest rates are the answer to everything, which will only, I guess, the best example would be the Canadian financial markets, and that is that they lowered interest rates about 4 months ago, and inflation just took right off again. So it's not, that's the big concern that the Federal Reserve has, is that they've seen what happens when people lower interest rates, when we still have inflation growing. It's growing slower, but it's still growing, and it's we see the 30-year and we see the 10-year all trading in the fours, and then we see the 30-day. Let's put this up on the screen too. So let's go over to the beta right there, and now they're both looking identical. And then let's do this, plus and we go over here, and we put the bonds up. Let's look at the bond rates in the United States. And here's the bond rates in the United States. It's a little small, but what you can see here is the 1 month is yielding 5. I'll highlight it there. 5.378. The 2 month is yielding 5.374. The 1 month is yielding 5.29. The 4 month is yielding 5.26. It's not until you get into the 5 year right here. Is that 5 year? No, 1 year. I'm sorry. 1 year. It breaks the 5 and goes down into the 4s. And then when you go all the way out to the 30 year, it's at 4.4, 4.5 in the 20, basically 4.15 in the 10, 4.008 in the 7, all the low 4s basically. So, it's not abnormal. It's a normal thing in American history to see our interest rates like this. It's just that in the quantitative easing era, it's not normal. And so that's, as far as they're concerned, they could go back to minus again. There you go, a sip of water. I hope that helped out. Let's see. Moreover, markets are talking about the various upcoming company earnings reports. Right, we're about a third into the earnings. They're about mixed, nothing major. Interest rates are so low, and the economy is, pulsating along. There's trillions of dollars from the Fed, from the United States Treasury itself that are pushing the markets around. They've passed all these things. Matter of fact, there's been this one headline where they passed this $40 billion Wire America. In other words, add internet to the rural areas away from the large populations. And that was passed almost 2 years ago now, right before the Republicans got the control of the House, and it hasn't really gone anywhere. They haven't spent a dime, and it's like that with a lot of that money that they borrowed. It's just sitting there, waiting to be spent, and it hasn't been spent. And so, because the policies are disorganized from it, more than likely, but. That is the rationale. So I hope that answers that. Moreover, markets are talking about the various upcoming company earnings. That fits it. The earnings are going to be kind of mixed, fine. McDonald's I think comes out today or tonight, and they were saying the stock's down about 5% for the last. If it's not even 5, I don't think. It's like 3% for the last couple of months, last quarter. And chances are, we already know what it's going to be. Have a general. In other words, I would assume a less ugly number will make the market make the McDonald's rally. Now we were talking about the. Last week we were doing a little conversation about the McDonald, what they call the Big Mac indicator. What it does, it looks at the price of what the Big Mac is being charged for every major city in the world. So they look at New York, and then they go look at they might look at Los Angeles, that type of thing. They might look at Dallas. And then they'll look at, say Miami, and then they'll drift. Maybe they'll look at Chicago. It's hard to say, but it has all the indicators. And then they go to Tokyo, and from Tokyo they jump over to Shanghai and Beijing and Hong Kong, and they look at all around the world. Brisbane. Just all the major cities around the world. Paris and Moscow, and it just goes on and on and on. So that is, I guess that finishes off that earnings thing. More of the different companies. Let's see. Yana says, I kind of expect for that the earnings will show an increase of costs for tech. Yeah, that's for sure. Good results for traditional firms. Yep, there you can see them rallying from it. By the way, about the Friday U.S. employment data. Yeah, that's coming out this week. We have that. That's the second. Uh-huh. Might be ignored due to the Fed taking the main stage. Maybe not. They're going to be keying off of it, and we've seen some odd fluctuations of employment and GDP. So that'll play in. That'll play in. Now today, they're lifting all the markets up. You can see. Let's see. Let's show you the U.S. markets here. Let's go take a look at them. Put my glasses on. There we are. There's the S&P 5. Oh, that's not it. I don't know that. Close workspace. Yes. And close workspace again. Did I transfer that over? Let me just double check if I did. I'm almost dead sure we did. Let me go to the VIX. Yeah, there's the VIX. And they're trying to push it into the sell on... Is that today? Yeah, it's today. So it's trying to be pushed into the sell today. And the weekly on its third week, just like over here. Looking the same way. Same thing. There we are. Oh, let's stay over there. Let's take a look at the 4 indices, and then we'll go back to... We haven't even looked at the dollar index yet, so we'll do that after this. So here is... Let's close that. See, the S&P 500 is down about 8 points from its high today, but it's still up, 25, 30 points, something like that. And then you go over to here, and you can see the S&P 500 pushing into that, and a buy right there, and at the same time we're in a sell. So this could be more of a dead cat bounce. There's a lot of news this week. You would assume that that'll have some influence. Let's see. So from there, the Nasdaq 100, the Tech 100, right there, trying to do the same thing, but it's not high enough. Let's remove that. You can see there it's still in the minus, and it's a third week in a sell compared to the S&P first week. And then you go over to the Dow Jones Industrial Average right there. You see the Dow is in a buy from Friday right there. There, I wonder how I did it on the LinkedIn. Let's see what it is. Oh no, I did the VIX. So you can see right there, it's pressing up, and it's in a weekly buy. It didn't challenge the weekly sells whatsoever. And then we go take a look at the Russell 2000 right there. Same thing. It's been in a daily buy for 5 days, and this is starting the 4th week in a buy. And they're buying stocks that they think are going to be rotated into with a growing economy. They know that Mr. Trump is going to grow the economy, so they're reaching for those stocks now, which makes sense to me. Well, how's that, Giannis? Did that satisfy the answers? Did I give you the right answers, or no? Did I at least hit the right subjects? All right. So from there, go take a look at. Mostly, yes. Okay, good. Well, if there's nothing I didn't respond to, let me know. I am now just wondering. Wondering about what? What are you wondering about now? On an international level, I'm not really seeing much. Let's see. I am what can we expect from the VIX, SPY, and NVDA during this week? Okay. Well, the VIX, there's VIX. Is that the VIX on there? Yeah, that's the VIX on there. You can see the VIX could start to roll over. Might see the weekly start to pair in, especially if we're going to see positives over the. If this is a dead cat bounce, they'll go after the weekly sell. If it's, I'm sorry, they will not go after the weekly sell. If this is a dead cat bounce, and in other words they try to sell it down a little bit, they will not go into a weekly sell, which is going to be pretty cool. This will, if they did a third full week and a weekly buy, would be very interesting. I think over the last couple of years, the most we've ever seen is a 5-week weekly buy, and the rest have been like 2s and 3s. I think a couple of them have been 1s. You know, so here we are going on the third week. Whereas I guess you could say, then we could take a quick peek at Nevada and see if we can spot like some type of Fibonacci bounce back if it goes into a buy. Right now, we needed to go into a buy first more than anything else. We're not really seeing that at all.
Market data connection reestablished.
So let's do this. Let's put the Nevada up there again. And I imagine what I'll do is I could Fibonacci from here down to there and see what kind of bounce it could do. I'd assume it would challenge this area here, the 120 area. Right now it's trading in the 113 area. Could it pick up $5 or $6 this week? I could see that. Problem is that we're in weekly sells. We need to see these things change. We need the daily to change, and we need the weekly to start to bounce and get the line starting to move back up. We're not really seeing that action. So I'm not, it wouldn't surprise me if they start to buy, they push that in there. But I don't know. I don't think they have that short a memory at the moment. I think they have a longer memory, and they know that there's a rotation developing. And so they may not be so fast to bottom fish. Let's put it that way. And I don't blame them. Money managers still confuse me on their level of no, that's not it. Cancel. The way they the way they, what's the word I'm looking for? The way they invest. They invest like it's another era, really. And it kind of surprises me. I really don't understand the logic to it all anymore. I guess they are trying to be pure. I guess that's what it is. And they try to invest like it's it's a whole different game plan. That's in other words, like it's 1974. They don't use the options. They don't use the binaries. They have the tools too. They got the money, but when they use them sloppy, as far as I'm concerned. Let's see. And so then let's do this. Let's go over to let's do this. Let's go to SPY for you. There's the SPY from Friday. And it was going green and moving up. Let's put it up over here. As you can see right there, and it's trying to bounce. It was very close. It didn't get into the buy on Friday here. But what's interesting, our beta picked up some buying. Look at that right there. And so you can see that strength. And at the same time, the weekly slid into a weekly sell. And that's why you see that on this screen right there, right now. And so the SPY is trying to give us a bounce. I think it was actually a green dot a little while ago, because they had moved it up pretty advanced at the moment. In other words, for the pre-market. And I'm not a big fan of the pre-market overall. I know that there's a good chance always that whatever they think they're doing they end up not doing it in the end. It's like a thin market. The pre-market is thin, and the Europeans seem to, drift away from buying until the New York is open, where there's liquidity. What was the other one? SPY, and let's see. We can expect from the VIX. I think the VIX is going to work its way down. Because of what we saw. On the what we're looking at this point. Now, Nevada. Let's see if we can find it again. Not there. Is it in there? Where is it at? In there? I think I have to reopen it again. That's what it is. Yeah. So let's open that up like so. Yeah, that's what they're really reflecting right now. And remember, the VIX only represents the S&P 500. It doesn't represent Tesla or anything else. It just it represents. It's not an individual one. So in other words, we could basically we can go in and look at the volatility of some of these other products, and they're nowhere near what what it looks like. So let's see. What was I downloading? I was downloading something. I forget what it was to put up on the screen. Oh, I know what I want to do. I want to go look at the NVDA. I want to see what the Fibonacci looks like and give you a projection. All right, so we go like this. We take that high, and we take that low. And if we widen it out, it makes it more sensible. And what we would assume is that it could get up as high as anywhere from that 119.17 right there to the 50 percentile of 123.50. If it would go into a daily buy, or at least start to attempt that, I could see a potential towards that. It probably will play that Fibonacci sequence. Due to the fact that it's in a weekly sell and a daily sell, the odds are that it's not going to move that well in it, though. That's the problem. Okay. Yeah, that's those three: NVDA, SPY, and VIX. We can look at the VIX again, just to confirm what we were looking at before. Where's that at? There we are. Let's make it the whole page. Right there. Nope. What are we doing here? There we go. And there's the VIX. Let's show it to you again. And so for this, if we start to break down in here, then I would expect to see it challenge these lows. It won't. It's nothing. It's not that hard. Just that thing has way more volatility. But remember, you are following the S&P 500 VIX. It's not the VIX for McDonald's. It's not the VIX for Tesla. It's not a VIX for Amazon, or it's just for the S&P 500. All right, and then where's the next one we do? Let's take a look at what was the other one you said? Nevada. No, we already looked at Nevada. SPY. Let's go over to the SPY. And there's the SPY. They did on Friday push on it to try to get into the buy, but you can see the daily is way down. And you can see at the same time the weekly went into a weekly sell. So that is that. See. Now let's go over to the dollar index and see what's going on in the dollar index. There we are. And you see the dollar index showing a lot of strength here this morning. That's live now, 29. You see it's turned up here too at the same time, trying to get into the buy. And the only difference is that the weekly is still minus, but the slow has, looks like it's trying to, let's see, what is that? That is still in the minus. Let's see, widen this thing here. How do we do this? Let's just go over to the other one then. Here's the DXY on the other platform. It's showing the gain, but it's not showing the internals as clearly as I'd like. Let's do this. Mousy, mousy, mousy. There we go. And here's the dollar index. Right there. So you see that pop that's going on, and you can see the fast and the slow are turning up, but they're not through the manifold. Now on the other one, it's showing that, which is got the. We still have to fix this. The manifold is in the wrong spot. The whole thing is a little jumbled. The yellow, the green, and the blue line are basically the white histogram. And you can see the green there. What's curious is that the blue is turning up here and it's not doing it on our betas. That's the one thing they need to. My son needs to fix the that. I'm looking at some of the other things. I'm reading the fundamental one. Fundamentals will reveal what's next to a great extent. Yes, and we know right now that the economy is not really growing. We know that inflation is still expanding, just slower, and interest rates are at their high end of the range, and everybody knows that the interest rates are transitory, so they know that there's a change coming in them, and they're saying not this month, but September. To me, it appears that this week is unclear. Too many contradictions in signals. Yep, it is. It's true, and you know what? This is usually the slowest week in the summer. This one right here. Matter of fact, I think you can go back to many of my webinars going into these weeks, and I usually say that the indicators are the sloppiest and most inaccurate this time of the year. From last week and this week, and usually the week before too. And then it's usually these 3 or 4 weeks that are very sloppy. That's not abnormal whatsoever. That's a normal summer action. They're still pressuring the stock market. Let's see, where's that? Right there. Let me just show you what they're doing to the stock market. You see it right there. Here is the most shortest of our intradays. You know, we were talking up in here, we were looking at all that, we're starting that off, and it has fallen from 536 down to 516. You're talking about a 20 handle drop in the S&Ps. Now over, as you can see here, that's the weekly dollar, and they're reaching for the dollar. Let's go take a look at the 30-year bond. We've seen what they're doing to the bonds, you know, what the prices are generally. But let's just take a look at the 30-year bond. It's been rallying the last couple of days in price. And you can see here, oh, you can't see that. Now you'll be able to see here. You see, when the price goes up, interest rates are dropping. So that's even more of a confusion. Yeah, the Fed. Well, the Fed runs the whole markets. That's the problem. The Fed does run the markets, and we talked about this last week. How the Fed is basically, concerned about the funds that they could be, the government, U.S. government, could be liable for. And so that's the real problem. That is the real problem. So there's, the Fed is influencing things so that the government is not going to be liable. They're going to be not going to be responsible. Well, they are responsible. They're not going to get charged. In other words, we talked about it last week about the Fed and the funds, mutual funds, hedge funds, banks, the Federal Deposit Insurance Corporation for regular banks, the Savings and Loan SL DIC, the Savings and Loan Federal Deposit Insurance Corporation. Then there's the brokerage. I forget what they call it. The equity. It's not equity. It's not brokerage, but it's it's the brokerage companies like Goldman Sachs and so forth. They're insured, and so what they're doing is they're fighting to keep these markets firm always. They're fighting to keep them. They're trying to knock inflation down, but they are basically fighting themselves in the sense that because they keep on pushing the stock market up, and then you have a wealth effect from it. People spend money, which increases the inflation. That's why there's a lot of smart economists who are not politically motivated, and they say, please don't lower interest rates right now. Wait until the economy starts to grow. Because the economy is not really growing normal. It just grows through government employment. Most of the jobs are more related to government spending. And so that really puts a real strain on it all. All right. So I guess that's about it. I guess when we look at the dollar, I guess we'll go through the currencies right now and check out the currencies. So that's the great experiment. Here's the euro. Now there's something. See, the dollar index is rising. The euro is falling, and interest rates are dropping. That normally makes the euro strong, not weak. When we looked at that 30-year bond, let's just show it to you again right there. I mean, it's been going up for a couple of days now. When it goes up, it's low. The interest rates are dropping. You can see it went into a daily buy on Friday there. We're in a weekly buy. So the overall belief is that I heard someone say it again today, or I saw someone write it, and they said that markets see an interest rate cut in sight now. That's what they said. They see it in sight. Before they just speculated on it because it's transitory, but now they're saying not only do they anticipate it, they physically can see it. That's what they claim. I myself, I'm mixed. I trust some very consistent economists that are right like 9 out of 10 times, 8 out of 10 times. They're very solid. Not the government ones that Mr. Biden uses, but the private sector ones. And it says a different picture compared to what the White House and Washington is trying to tell us. They're trying to tell us that we're not seeing the markets right. It's the weirdest thing. The inflation we see, we go to the store, we're not really seeing it correctly. That's an awful hard thing to try to convince people who are, every time they go out to buy food or put fuel in their machines, they're paying a heck of a lot more than what they did before. So it's a very strange event we have going on here in the States. Very strange. Huh. Alrighty. From there, let's see. Let's see what cable's doing today. There it is right there. It's in a sell still. It hasn't come out of it, and it's in a weekly buy. Again, fits Janos's point of view is that mostly what do you say? Most likely, above all, well set The Fed will set stages. Too many contradictions and signals and directions. That's what he was saying. And that's true. That's where it's at. We're at a neutral spot at the moment. This is historically a slow time of the year. And so, it's hard to take it serious, It is. It's very hard to take this action serious. And at the same time, you have this very unique rotation going on where they're selling the major stocks, but they're not hurting them that bad. They kind of, people kind of pretend that, oh my God, they're slaughtering them. And then I went around on Thursday or Friday and showed you, they're not slaughtering them. They're just not exploding on the upside anymore. So it's like this relative thing going on, They're like, oh my God, it's down 4% for the last couple of weeks. It's like, yeah, all right. And it's up 240% for the last 12 months. So which one am I supposed to pay attention to? I say the real one, and that is you look at the overall trend, the longer view. Right now, the shorter term view is they're being sold. Yep, we can tell you that. We agree. But are they being damaged? Is it a bear market? No, not at all. All right, and then from there, let's go take a look at the Swiss. Swiss are trying to push into the buy today. See, they're all acting like interest rates are rising over here in the States, and we just showed you the 30-year. It's not rising. So, I don't know. Talk about confusion. And then from there, we go over to the yen. Let's see what the yen is up to. There's the yen. The yen doing the same thing. It's pushing, trying to get into the buy. It's pretty much unchanged. It's in a weekly sell now, starting a third week. Then we go back to the great experiment. Right there, and it seems to be trapped up in that range. It was at an all-time high last week. I guess it was the week before now. Yeah, it's 2 weeks back now. Right there was the all-time high. So that's 3, 5, and 3 is 8. So 8 days back, it was at all-time highs. You can see we're still in weekly buys for months right there. Daily sell throughout ever since they made the all-time high, it's slowly found a way to get back into the sell right there. Let's steal this one. Went into the sell there. So we're, again, just as Jano said, we're in that contradictory situation. Contradictions are outstanding right now. Weekly buy, daily sell, rotation of the most expensive companies, the leading edge to AI and so forth. Let's see. From there we go to South Africa. South Africa has been on that kind of upwardly draft for the last few weeks, 3 weeks now. You can see on Friday they pushed it into a sell right there. And today they're trying to push it back into the buy again. So let's go take a look at, because of that action, we go and we look at, there's gold. You can see gold is higher today than yesterday. Still in a daily sell, still in a weekly buy. It's that consistency at this point of the same things over again. Let's see, let's just save that so we can move it over. There we go. Then we go over and look at silver. Right there. Silver same way. A full couple of weeks in a sell, 3 weeks in a weekly buy, weekly sell. I'm sorry, this is both sides. Not like gold, where, as you can see, gold is fighting with itself. It's in a buy. Went into a sell for the sell-off. I think that was it right there. Yeah. So it went into the sell-off. Oh, cancel. Right there. But it's in a weekly buy. So you kind of have no, who really wants to sell the metals at this point. I mean, really. I mean, unless you have profits in them, there's no reason to sell them. And then there's the silver. And the silver doing the same thing, as it was doing last week and the week before. And that is that it's in a weekly sell and a daily sell. And then you can see copper here. Copper is pushing down, still in that sell now for was that 2, 4, 6, 8, a ninth day, and 3 weeks. We haven't really seen any stories out of China of late. Just the ones we've seen are not the prettiest stories. They're having problems financially over there. So then okay. So then from platinum, you can see platinum is trying to lift, and it's in a sell and a weekly sell. And then from there we go over to let me just save that. There we are. There's the gold there. So from there, we go over to, I guess you say, the energies. There's crude oil. Crude oil is, as much as there's a lot of noise going on in the Middle East, it's not really having much of an effect on the oil market. You can see it's much lower today. Now it's up a few cents. We're in a weekly sell going on a third week now, and we are 2, 3, 4, 5, 6, 7, 8 days in a sell. So there's pressure on that product also. It doesn't seem to, it's not following along. People, there was talk this morning. I was up at right after the European Open, and they were talking. It's in the foreign markets. They were talking about, well, we're surprised we're not seeing more of a downdraft on the product, but we're not. And it's that they used they used Tehran as an example. They said, look, the Israelis bombed there, and it didn't have any effect on the oil market then, and it doesn't seem to be having an effect on the oil market now. And that's pretty much the story of it all at this point. So, and then we usually drift off, like Brent is doing the same thing, unchanged. We're not really seeing a lot of positive action. Natural gas, I think, is breaking the $2 area. It keeps on trying to find ways to, pop itself up, and or pop itself down, I guess you could say. For natural gas, they keep on finding it. And oil doesn't seem to be able to get a grip on this weakening market. All right, traders, we're out of here. And it's been more of a stock thing than a currency thing today. And then from there, we will sing our song and get out of here. And pretty much we'll start the day, because the market opens up in 4 minutes. So, happy trails to you until we meet again, which will be tomorrow. Happy trails to you, to all our trading friends. All right, let's finish off with finding a title on this thing today. What should be the title? Oop, I just missed something. I just saw it. Janos, Murray, contact Janos. Okay, where's it at? I got to give you the phone number for my, what is it called? WhatsApp. Yeah, we'll get that straightened out today too. Let's see, where else is it? All right, traders. Talk to you tomorrow. Ta-ta for now, and I'll put a title in there as we speak.